how to use the small newsletter. Now, why would I bring this up on such a busy day like we've got with, small U.S. crude oil futures coming to market, a lot of people having fun, at least taking a look at those markets and also hopefully putting those looks into practice and trading it. We're looking at the small newsletter, Pete, because subscribers in their inboxes just in the last hour or so here got a refreshed newsletter that has all the data for crude oil and the newest interest rate products and a bunch of new fun stuff here. Pete, you've told me in passing that this is your favorite piece of content, your favorite newsletter that you get out there, and you get it exclusively if you are a subscriber.
You know what? Absolutely, Frank. And what I love, and this has been your baby. It's been a tremendous tool because in my 30 years, I've been served up so many different services, either, analysis, whatever. And you take them and you got to throw away 99% of them. You look at them and you realize I don't want someone's opinion. I want statistics. I want tools to take that 50-50 bet to 52-48. And I want to be able to then incorporate those statistics into strategies that work for me. And that is, I would say that's the hardest part, is to get those statistics, get those tools, not take the opinion out of it. And we look at context, we look at a pipeline and this and that and the other thing, but we don't necessarily that is immediately priced in the marketplace. We don't look to trade those news events. What we look to trade is the statistics around probabilities. And that is what you have continued to deliver. That's so powerful. And it's consumable. I'm not drilling through 30 pages of numbers to find the salient points that work for me. Everything here comes from a trader for a trader. And that is really few and far between in today's age of recommendations.
Yeah, absolutely. So we'll dive into the newsletter here and show those non-subscribers and subscribers alike how to use it. But if you haven't already, go check it out at subscribers.thesmallexchange.com. On top of reduced fees, subscribers are getting this exclusive content that just got a facelift. So let's dive into it, Pete, and kind of keep in mind the SMO product, which just got added to all of these. Now, I think 8 pages of content going exclusively to subscribers here every Monday morning. And let's just see what we got, see how to use it, and go from there with the starting point here. Where are the smalls? And this is, like you said, Pete, from the point of view of a trader, what we think of first and our jumping off point every morning, whether it be just a random day or the start of the week, it's just simply the current prices for the smalls and their relative value. So you look at SMO there, Pete, at the start of the week here, priced around $64 a barrel with those recent highs and lows of $57.75 to the downside and just above $66. That's some nice quick context that you can immediately put to use on a day like today.
Yeah, absolutely. And this is, so you want context around where the market is and relative to, where it's been in a tradable amount of time. We don't want to go back 20 years. And this is the start of strategy building. We always talk strategy is that first thing. I have bias, then I put strategy together, mechanics and management. Now, this is the key piece. You can see how each one of these feed into a very economical system for building out strategy. So this is an important starting point. And you know what? In one page, and what I find, and honestly, things I find valuable, I will put on my desk. Now, do they sit right in front of me? No, but I want to refer to them as markets move during the week, and I may be focused in one area, but I see opportunity in another. And that's one of the great benefits now is we could trade all these different asset classes with just the movement of a mouse. I want to then have those tools to put context around. Okay, I've seen some movement. Where's it been? Exactly. And then we're going to talk statistically the probabilities around where it's moved. And that is, there you've got the two ends of building strategy. It's so powerful.
Yeah, before even getting to those probabilities and standard deviations and like expectations around where the market could go, right here, Pete, you have a reference like, oh, technology is selling off today. Right. STIX is in the red. I look at this and I already know relative to the last 3 months, STIX is at the lows and further selling, already get some ideas populating in my brain. Same with US dollar, man, another red day and it's at the lows again. Something churning there. SMO, the newest product here, a nice big rally off of the lows from this morning, and they're already at the highs above $66. is recent highs for this crude oil contract. So already you've got some gears churning, and you have this piece of commentary on recent activity and how it can be traded in the smalls. Just recently, I went deep on this Colonial pipeline hack, Pete, and how you might use a small U.S. crude oil future to either hedge against different parts of your portfolio, or simply gas prices that you need to look at and put into your car or what have you, or just trading, speculating on the opportunity. Like maybe you want to dive into a little bit, Pete, what we saw last week with the pipeline hack coming out, gas prices skyrocketing and crude oil prices moving higher as well. You could have both speculated it and hedged based off of that information, right?
Yeah, absolutely. And, you know, outages like that are interesting because it creates a short-term perceived squeeze, but all, you know, and what you see is the market then react to the fact that, well, that just means 2 weeks down the pardon the pun, 2 weeks down the road, there'll be additional supply to satiate that short-term demand. But the ability to trade, and this is what I like, these are tradable news, not for me to hear the pipelines out and buy crude oil because I think it's going higher. But after that movement has extended, you put so much movement around a news statement like that. Well, okay, one segment of supply is disrupted, and it's a material segment. But we do know that infrastructure-wise, nothing's changed. Demand size, nothing's changed. The input, which is crude to gasoline, hasn't changed. So this is a tradable opportunity. Now it's giving me some dislocation in pricing to trade the other side, or if you want, on any pullback, to trade the extension like, okay, this is going to add some legs to crude. But I like the ability, as you said, to hedge. You know, you could take this as a hedgeable opportunity on the bounce up. You could take this as a directional opportunity on a price extreme, or you could take this as an ability to hedge other parts of your portfolio in an area where and you want to rope in the inflation piece, whatever your strategies are built on. There's a lot of important pieces here. And, you know, I love the fact that, you know what, you walk us through here. And just by definition, over the weekend, I read a lot of different stuff. And a lot of it you consume and kind of eject quickly. You've always had this great gift for putting together a succinct, tradable story behind, you know, making news like that, oh, that's interesting. That could cause crude to rally. Putting context around that movement and the tradable opportunity. That's what we're looking for. Not to become petro engineers or whatever you call those guys, but to become vested with enough information to create tradable opportunity. And that's what you do every single week, my friend.
Yeah, it's not a matter of like, oh, this is why I would buy crude oil for the next, 3 years. It's more like, hey, this is what's moving here, and this is what a small exchange future can be used for off of stuff like this that's moving around in the market. And what I like that we've added here, Pete, and I don't even know if you saw this because this just came out in this recent issue that went out to subscribers today, is we've added a new section that essentially takes what you just explained there, Pete, just like quick tradable pieces of news that don't, give me a bunch of opinions, but give me context for what's going on. We have now whittled that down into tweet-sized chunks for every single market for last week and this upcoming week. Actually borrows off of your past idea, Pete. I know you like the economic calendar. So what we did is we said, all right, what was the biggest mover of the small stocks product or the small U.S. crude oil product or the small metals? What was shifting it around last week? And what are we looking forward to this week that could move that thing around? I mean, in sticks, we have earnings in JD, Baidu, and TME this week. Those are 3 holdings within the sticks product. That's something I want to know going into this week. SPRE, we've got a bunch of different numbers coming out of Europe and Australia this week relative to interest rates and inflation and everything else. That's going to be shifting around those commodities. Now we've given you a even more succinct, Pete, to borrow a term from you, even more succinct piece of commentary on what happened last week and what's moving this week. It's kind of our own version of the economic calendar that looks at the week past and the week ahead.
But a more consumable, practical one. You know what? We always talk about, I'd like to be aware of events that are coming so I can manage my deltas and be ready for tradable opportunity. But again, you throw out a calendar, and again, Frank's kidding a little bit because that was in all this wonderful strategy and statistics, that was my responsibility, was making sure the calendar was right. So important part to know where tradable opportunity is, looking at those numbers. Are they of any value? No. The market prices and discards them quickly. But and I think the one thing I like really here is that these, whatever the market's looking at, we can't argue the fact that these numbers come in and out of vogue. Yep. 20 years ago, when trade balance would come out, which is a number you and I haven't talked about since we've worked together, you could see the euro currency market move 300 points in 1 second. Now it comes out, nobody even looks at it, or is there any more? Yeah. So numbers come in and out of vogue. Does that mean they're more valuable or not? No, but the fact is the market is using different things to base movement off of. It doesn't make them right or wrong. It just makes us more aware as traders of what is driving stuff in the short term. I like that because that adds enough context around story to let me put my strategies into place.
And that's exactly right, Pete, because, sometimes until the last couple of months, non-farm payrolls didn't matter. It didn't move the market around, but as of the last maybe 2 or 3 months, everybody's watching non-farm again. Right. And so we're able to, as traders, curate those data releases and say like, hey, this is a data release that has been shifting crude oil around, and this is when it is, this is when I would look for it. We curate that stuff for our subscribers. And now let's get into the data curation, because we have expanded the data that small exchange subscribers are getting here. They're getting everything from 1, 2, and 3 standard deviations on a daily basis to 5-day forecasts that are given from realized volatility on each of the products, and then on to the last 3 months worth of movement on a percentage basis. So you get to see, oh, this product is up 10%. This one is down 15%. And this is the about how many percentage points it moves on a monthly basis. We've got all of these numbers for all 8 of the small exchange futures here. And this is when you start building those expectations, Pete, right? Like I got the commentary, right? I got the data releases and everything else. And now I know if I buy a small US crude oil future, it tends to move about $1.50 on a daily basis. So I shouldn't be waiting for a $10 rise on any given day. I can start to model my trading. Like, how do you model your trades based off of standard deviations, knowing that SMO moves about $1.50, Pete? What are you looking to use that for when you're trading SMO?
Well, we talk about standard and non-standard movement of the day. And again, it's dynamic. That's what's so powerful about this. I'm not using a number from 3 months ago or, even 30 days ago. I'm using a relevant number. And, if I look at that every day, that becomes a little bit too granular. Here you've got this 5-day forecast is the perfect context. So knowing that the movement, a traditional inside day is $1.50, that's my first start. I'm going to look to manage. If I'm long and we get up there, I'm going to look to manage some of them. Am I going to look to turn myself around? If I have nothing on, maybe I'll look for a scalpable opportunity around there, because I know that's what and you said it perfect, that's what the market's giving me. I'm not going to lay over my expectation that, and this is the classic death knell, this market should be. Whenever you say should be, you are now forcing your dreams into the market's reality. Stop that. That's going to just destroy you. So take what the market is telling you in terms of movement, and accept that is where you're going to work within your range. So the tradable opportunity, if we move beyond that, then that creates another set of, I'm going to start to look at probabilities of moving up 1 day, moving up 2 days, up 3 days, around the second part here of the 5-day forecast, incorporating that into, and each one of these moves us from 50-50 in my mind. Now, remember, if we move from 55 to 45, it's not a guaranteed win, but we've moved the ball, and each movement of that ball from flipping the coin is material in the long run. If you stay, with strategies, stay with your mechanics, stay symmetrical. Now we're talking about tradable opportunity.
Yeah, absolutely. I started with the example of like, if I buy one of these futures, what can I expect to get out of it? Realistic expectations there. But also on entry, you look at the fact that SMO and SPRE, the commodities there from the small exchange, oil and metals, both rallying here to start the week. Both of them are near or above their full week's projection, the 5-day forecast for all the way through Friday here on Monday afternoon. That should hopefully get those gears turning once again on whether or not I want to. I see an opportunity, like you said, that is better than a coin flip, because you could go to any of these 8 futures from the small exchange and just be like, well, I got a 50-50 shot, so I'll sell 4 of them, I'll buy 4 of them, and we'll see what happens. And in the long term, you'll have a 50% success rate, and you will have an account that's around where your account size is right now on a theoretical basis. But once we get to 55 or 60%, or with the standard deviation, 68%, now we're looking at putting those probabilities in our favor.
Right.
Now, here's something that is also completely new for the small exchange subscribers. Actually came from a subscriber's idea, Pete. I don't know how we didn't think of this, but great idea from, I think his name is Michael Cardman. I'm sorry if I'm messing that up, but great idea here. We just added this for all the small exchange subscribers. Pairing the smalls against each other, you've got constantly updating correlations and ratios between small exchange futures. Looking at that SMO column, Pete, I see that I've got, a pretty high correlation to markets like the sticks in the SM75. We got a 0.5 correlation between SMO and SM75. I can see they trade on a 1-to-1 basis. I've got intriguing pairs there, especially today. Crude oil higher and stocks trading lower could be a potential trade for some convergence. That's how you use these ratios and correlations, right?
Absolutely. And this is, an important part of diversification in terms of product and strategy is to look at the pairs. Now, pairs have been a challenge because of everything from different tick sizes, different notionals, different quoting conventions. If I can look at the pair and just express an idea, not have to, we always kid, not have to do the math. In other words, what is the DVO1 weighting of a yield curve pair trade or metals and oil? That's so powerful because then it's just my idea put to work. And that's what, that's what you take away from these is you've got the correlations, which give you, and again, we don't want 0.98 correlation. We want a dynamic correlation, something that gives us the ebb and flow, the back and forth of a tradable opportunity. And then we want the math to back up where is that tradable opportunity statistically. And you've put both these together in one spot, which is great.
And we even give you some ideas to kind of go off of. Like, once again, I never want to create a piece of content here that's like, here's my idea and this is why you should do it. We never do that here from the small exchange. We're always just like, look at S30Y minus S10Y, the knob spread here, and give you some historical context with the chart, and then give you the access to like the ratio and what you might look at relative to what a steepener is and what a flattener is. Do the same thing with SM75 and SMO. We already have it here on this first new edition of the pairs of the week from the small exchange subscriber newsletter. And we've got 3 for you to get those gears shifting. And Pete, right up your alley, looking at SFX and the McDonald's futures, the Canadian dollar micros, there's been a lot of movement there as well. So we're getting those ideas going here for you with those pairs of the week. And hopefully you can shift them around and take a look at those exclusive trade ideas in the newsletter and then base your own trades off of them with all of this information. And the last piece of information here, Pete, on hedging the smalls, and this is a big one, both for comparative purposes. I can simply see like, one SM75 is about 20 shares of SPY. That's nice. And you can also see that, 3 SM75s get you 1 micro ES. So it's a third the size of micro ES. You can get some further context, and you can look at creating these outside the smalls pairs trades or just hedging your exposure. I was talking with a buddy of mine, Pete, who has, I forget what the dollar amount was, but thousands of dollars invested in tech stocks. And he was like, what do I do if I think tech stocks are kind of at a high here? And I was like, look at selling a sticks contract. It's a 0.9 correlation to NASDAQ and these tech stocks. It's worth about $6,000. So as long as you're invested more than $6,000, a great hedging tool with these smalls as well, right?
Absolutely. And, I think we always say it's not smalls or, it's smalls and. So let's expand our product universe, which is something that's always important to traders to do. And let's do it in a way that they're easy to adopt and they fit proportionally into what we're doing. So it's, Frankie, we always talk about tradable. If it takes, and you and I spend a lot of time explaining yield curve trades with DVO1 and convexity and the ratios and everything. And it's an exciting trade, but the lift on that trade is so substantial. And we know there was a small but dedicated cadre of people who traded that, but it was a tough trade to master and understand. I want to be able to put trades on that are easy to understand, that fit and are or basically you can explain that pairs trade or that ratio trade you just spoke of my tech portfolio to sticks in 3 sentences. there's a deployable trade. There's an empowering product for you because it doesn't come with a user guide that is 100 pages long. And that is something that I think will continue to resonate as people adopt products, test out and test drive the smalls. And I think you summed it up beautiful. You can scalp this back and forth for $15, back and forth, just within a 15-cent range. And I think, you know what, that seems to be a very comfortable back and forth just to try the product out without committing $150, $200 to each scalp.
So yeah, everybody today getting the numbers here and the context for free, but those subscribers will get these newsletters in their inbox every Monday exclusively from here on out, the new refreshed small newsletter. On top of, Pete, their savings every time they trade the smalls. It's not even like you're joining our community here and you're just getting the exclusive content. You're also getting 50% off your exchange transaction fees on all small futures. And now you just added another product to this savings coupon, which is the small U.S. crude oil futures, 50% off for subscribers. If you haven't checked it out already, go to subscribers.thesmallexchange.com. It's a wonderful offering. We hope that you take a look at joining our small exchange community, getting all this exclusive content, the exclusively low fees, and some very exclusive apparel coming to subscribers trading small crude oil. We'll see that in the coming weeks. But yeah, please go check out the offering. Pete, thanks so much for creating. What we just created was not the 100 or 200 page user guide for all these other newsletters. It's just a quick, 10, 15 minutes on how to use this new and improved small newsletter. So thanks so much, Pete, for jumping on here today.
Fantastic work, Frankie. Thanks so much.
And that is it for Small Stakes, everybody. We'll be right back with Splash into Futures coming up next. A bunch of trading to do here on Monday afternoon, some inside days, but we got some ideas for you. So hang out, everybody. Thanks.